So how are we feeling today, Ada Army, Keith at Crypto Bullseye, and we said in the last video that this is the level that Cardano needs to break and close above. We talked about individual candlestick patterns. And in fact, we talked about this candlestick here, how this candlestick wiped out the previous 6 days of price action. However, this was going to be the rejection point, was the top of this pattern. We knew with a high probability that that was going to be a rejection point, but we know with a high degree that once we break above that, the bulls have got momentum, they've put in a higher low, then we can continue making moves to the upside. So we've got lots to talk about today, guys. What's going to happen with Cardano going into the next few days? Let's dive in. So anybody that is new to the channel, this is where you get short-term price action, mid-term price action, long-term price action. This is where you get an exit plan. This is where you get an end game. And we've been following Cardano for over a year. How did we know that $1.30 was going to be such a rejection point over a year ago? All the way back down here, guys. This is November, December 2022. Once we'd put in a bear market low, then you could start doing one thing. Once you start accumulating in a range, you can start putting your Fibonacci levels on there. Once you put your Fibonacci levels on there, you can look to see if they've got confluence and whether they're going to react at certain key levels. We knew that $1.30 was going to be a key reaction level, a key resistance level. Look at this, to the tip. Anyone that says technical analysis doesn't work, guys, to the tip. So we knew this down here. Go back and watch the videos from down here. This is where we started measuring our Fibonacci tool. And then we looked left to find out if this was a previous reaction point. We can see it was a previous reaction point here. So we knew that we were going to get rejected from there. Did we expect to come down to 50 cents? What was happening down here at 50 cents? Some people were selling and a lot of people were buying. A lot of people were buying. So the weak hands were selling, guys. Were the weak hands that are selling. So nobody put in the comments that you sold at 50 cents. Firstly, hats off to you guys. You weren't weak hands. Secondly, the people that were watching this that did sell at 50 cents are probably not watching this anymore because they are the ones that are flushed out of the market. That's what the market's designed to do. And it needs strong hands to hold, because when people hold, then the price goes up and there's less sellers, more buyers. Then you get your bull market, guys. So the aim of the game, we've been following it on the channel. This is the Wall Street cheat sheet adapted to the Cardano chart. You can see disbelief, hope, optimism, belief, thrill, the euphoria of the bull run. This is where everything's going to the moon, guys. And this is where complacency kicks in. We think that we've put in a higher low. Then bam, anxiety, denial, panic, anger, depression. We've been through all of these phases together since the last bull market. So that's what we need to do in the short term. Take out the 38.2. Once we take out the 38.2, clues look left, we've got a limited buildup of price action here. So expect a surge all the way to the next resistance point, clues look left. 61.8% of its previous bull market high is going to be a strong resistance point. So once we break $1.30, what I'm saying is expect a surge in price action all the way to $2. Right, that's the weekly chart, the daily chart. What needs to happen on the daily? This is what we were talking about in the previous video. This buy-up candle, that signaled one thing. That signaled a resistance flip to support. That's an RS flip. So it held support. We got a big buy-up. Lots of people selling, even more people buying. We held the 200 daily moving average. That acted as strong support, pushed price action back into this channel. So what needs to happen in this channel in the short term? We talked about in the last video. We need to overcome 82 cents. 82 cents in the short term would pull us back near the top half of this channel. Remember, when you're trading in the top half of the channel, you're bullish. Bullish. The bottom half of the channel, you're bearish. So we'll bring up our indicators and you can see, guys, as we're trading underneath this channel in the bottom half, you can see the RSI tends to be underneath 50. When we're above 50. So that's indicating that when we're above 50 on the RSI, we're more bullish. So we need to turn more bullish in the short term. We need to take out this 82 cents. We need to regain the top part of this channel. However, the elephant in the room in the short term, and it doesn't mean it can play out like this, guys. The elephant in the room is this, overbought stochastic. So potentially we could pull back a bit, but the aim of the game is to make sure that we put in a higher high when this becomes oversold again. That means bulls have got control. Another turn to the upside. Make sure you put in a higher high, start regaining levels until we start eating up towards this 38.2% retracement. You know the aim of the game, guys. Once we broke the 38.2, then all the way to $2. So that's what I'm looking for Cardano in the short term, guys. In the next few days, we're going to be monitoring this together. Can we break this 82-cent level? If we break the 82-cent level, I'll come back, I'll revisit Cardano with you guys, find out what levels we need to overcome next. Take care of yourself, and I'll see you in the next one.